In a shocking turn of events, the global cryptocurrency market has suffered a dramatic decline, erasing nearly $468 billion in value. Bitcoin has plummeted below $73,000, its lowest point since November 2024. What led to this catastrophic sell-off? Looking ahead, analysts believe that the cryptocurrency market could stabilize if Bitcoin manages to hold above current levels. Recent fluctuations have left many investors on edge, as the digital currency has struggled to maintain its upward momentum. The backdrop of rising inflation and fluctuating interest rates has created a complicated environment for cryptocurrencies. Many warn that without clearer signs of economic improvement, confidence may not return quickly. The market is closely monitoring Federal Reserve policy signals, particularly any indications regarding interest rate adjustments, as these can significantly influence investor sentiment. Additionally, ongoing geopolitical tensions, including conflicts and trade disputes, could either reignite risk appetite or exacerbate the downturn. If the negative trend continues, institutional inflows into cryptocurrency ETFs, which recently hit a record $1 billion, may slow or even reverse. This shift could dampen the enthusiasm that has characterized the market in recent months, particularly among retail investors. The potential for a downturn raises concerns about liquidity and market stability. Investors are advised to keep an eye on support levels around $70,000 for Bitcoin while preparing for potential volatility as the market processes these macroeconomic and geopolitical shocks. The implications of these developments extend beyond individual investors. A sustained decline in Bitcoin could affect the broader adoption of cryptocurrencies, as companies and institutions may hesitate to integrate digital assets into their operations. Conversely, if Bitcoin can stabilize and regain momentum, it may pave the way for renewed interest in the sector. As we move forward, the cryptocurrency market faces a pivotal moment. Will Bitcoin recover, or is this the beginning of a deeper market correction? The coming weeks will be crucial for determining the future trajectory of this volatile market. The cryptocurrency market had enjoyed a significant rally into mid-2026, with Bitcoin briefly reaching $122,800 and altcoins like Solana surging over 9%. This impressive growth was fueled by increased institutional adoption and a growing belief in digital assets as a hedge against inflation. However, this upward momentum shifted dramatically due to emerging geopolitical instability, particularly the escalating tensions between the US and Iran. These tensions, marked by military posturing and diplomatic breakdowns, spooked risk-sensitive investors, leading to a rapid sell-off in cryptocurrencies. Moreover, concerns over weakness in the US job market and expectations of Federal Reserve rate hikes added additional pressure to the market. The labor market's fragility raised alarms about consumer spending and economic growth, prompting fears of a recession. The combination of forced liquidations and panic selling created a feedback loop that accelerated the decline, resulting in the current crisis. Unlike previous downturns, the current market is facing simultaneous challenges from both geopolitical and economic fronts, which has compounded the volatility. The impact of this crisis is profound, with billions of dollars wiped off the market and investor confidence severely shaken. Retail investors, who had flocked to cryptocurrencies during the bull run, are now facing significant losses, while institutional players are reassessing their positions. The uncertainty surrounding regulatory frameworks and market stability further complicates the landscape. Looking ahead, analysts predict that the cryptocurrency market may remain under pressure in the short term as geopolitical tensions persist and economic indicators continue to fluctuate. However, some experts suggest that once these immediate challenges are addressed, a renewed focus on technological advancements and regulatory clarity could lead to a recovery. Investors are advised to remain cautious but optimistic as the market navigates this turbulent period. The recent $467.6 billion loss in the cryptocurrency market signifies a staggering erosion of capital that directly impacts millions of investors worldwide. Bitcoin's recent decline below $73,000 has catalyzed a shift in market sentiment from bullish optimism to a more bearish outlook. This downturn is not merely a statistical anomaly. It illustrates the growing unease in the financial landscape, driven by escalating geopolitical tensions, particularly between the United States and Iran. These tensions have heightened investor anxiety, prompting a more risk-averse approach among those previously enthusiastic about digital currencies. In addition to geopolitical factors, macroeconomic conditions are also playing a crucial role in this downturn. Expectations of tighter monetary policy from the Federal Reserve are creating a ripple effect across various investment sectors. The central bank's signals regarding potential interest rate hikes have left investors wary, as higher rates could dampen economic growth and reduce liquidity in the market. Concurrently, concerns about the stability of the U.S. job market are adding to the uncertainty, leading many to reassess their risk exposure. The implications of this downturn extend beyond individual portfolios. If the downward trend continues, institutional confidence in cryptocurrencies could significantly wane. This loss of confidence could lead to a slowdown in exchange-traded fund ETF inflows, which have been vital for institutional adoption and legitimacy of cryptocurrencies. Moreover, a prolonged decline may deter new investors from entering the market, stunting the growth of the cryptocurrency ecosystem. For the average investor, this moment is critical. The substantial loss of market value can dramatically affect personal portfolios, potentially leading to financial strain. Many individuals have invested considerable portions of their savings in cryptocurrencies, and the repercussions of this downturn could have broader economic implications, impacting consumer spending and overall market stability. Looking ahead, the cryptocurrency landscape faces significant challenges. Investors must remain vigilant as they navigate this turbulent environment. The future of cryptocurrency markets hinges on geopolitical developments and macroeconomic indicators, which will ultimately shape investor sentiment and market dynamics. As uncertainty looms, the resilience of the cryptocurrency market will be tested in the coming months, particularly as regulatory frameworks evolve in response to these challenges. On July 17, 2026, the cryptocurrency market experienced a severe rout, with Bitcoin's value falling significantly below $73,000. This sharp drop marks a staggering 39% decline from its October 2025 peak of over $126,000. The sudden downturn has sent shockwaves through the digital currency landscape, with Ethereum also suffering substantial losses, thereby contributing to a broader market downturn. The sell-off triggered forced liquidations exceeding $2.5 billion within a single day, intensifying panic among investors and raising alarms about the stability of the market. Major altcoins, including Solana and Dogecoin, which had recently seen positive performance, are now caught in this downward spiral, compounding the sense of urgency among traders. This sell-off is particularly notable as it breaches a critical psychological support level for Bitcoin, raising concerns about its future trajectory. Investors are increasingly wary as they reflect on past market behaviors, where significant drops often led to prolonged bearish trends. Unlike previous dips, the current situation is exacerbated by geopolitical tensions, particularly between the U.S. and Iran, which have created a climate of uncertainty. Additionally, economic indicators such as rising inflation rates and fluctuating interest rates have further shaken investor confidence in traditional and digital assets alike. As regulatory scrutiny on cryptocurrencies continues to intensify globally, many are questioning the long-term viability of digital currencies as a reliable investment vehicle. The immediate impact of this downturn is profound, with many retail investors facing significant losses. Institutional investors, who have increasingly entered the crypto space, are now reassessing their strategies amid heightened volatility. Such a dramatic decline could potentially lead to a reevaluation of risk management practices across the board. Analysts are closely monitoring market sentiment, as fear and uncertainty could trigger further sell-offs in the days to come. Looking ahead, the future of Bitcoin and other cryptocurrencies hangs in the balance. Market participants are keenly aware that recovery may hinge on resolving geopolitical issues and restoring economic stability. Additionally, the upcoming regulatory developments could either provide a lifeline or exacerbate the current crisis. Investors remain hopeful yet cautious as the market braces for potential recovery or further decline in the coming weeks. As we analyze these developments, what do you think will happen to Bitcoin and the broader cryptocurrency market? Share your predictions in the comments below, and don't forget to subscribe for daily deep dives into the latest news.